Welcome to the Final Bar. And I'm Greg Schnell, the host of the show. This is the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. Lots to talk about, obviously, this week. It's been a crazy one out there. Today, I want to cover off some stuff that I ended up selling today, and I feel like I'm selling it at the bottom of the market, but I'll show you the charts, and I think I'm selling at the other end. And then perhaps buying now and maybe take a look at some of those stocks that are starting to set up in a buying base and try to cover that off today. So hopefully that'll give us some ideas on things to look for over the next week or so. So first of all, one of the things that happened today is that all of my gold stocks got stopped out. Not all, but some of them. And so I just went and sold the rest. And I've been riding those up nicely while everything's been falling down around here. So what I want to talk about is what would make me sell. And again, you have to do your own thing. And one of the reasons I want to talk about this today is that the problem is we always want our stocks to keep going and we always want to improve. And so eventually you have to figure out when to take profit. So this is not a stock I owned, but it's a good example of some of the stocks that I did hold. But you can see there was a real topping structure here in around 310 or 320, and we could just make a horizontal line there at 320. And one of the as soon as you do that, so here we are, sure enough, the stock gets right to kind of where you guess it should. And sure enough, it rolls right over. And you can see the PPO was up relatively high, rolling over. And there's not a whole bunch of reason to stay in this trade. It was starting to break the trend line, but there were other conditions going on. As an example, Nugget or Dust or any of those, they started to change direction. Maybe I'll just grab a different one here. And if we just go to look at Dust, which is the ETF, the 3x ETF for gold miners going down, you could see that it was building a bit of a base here and all of a sudden bounced right off the 200-day moving average and shot up, and it broke a bunch of resistance levels that it was at before. So while I'd like to be long gold, obviously today, not just today, but I think the bigger issue is that this chart kind of had a breakout, pulled back to the 200, and now is starting to move the other way. And there's a couple of things that correlate with that, like the US dollar and those kinds of things. But I think the bigger picture here is that, this trade has been working for the last couple of weeks while everything else was going down. It actually made up 5% in my account while the market was pulling back. So I actually had a positive return on some of the stuff. And the point would be that when your stock is starting to move, you have to make a decision pretty much as it happens. And now one of the other sides of things, obviously, is the overall market is trying to bottom. So maybe let's just go look at those. And when we talk about trying to find something that's bottoming, let's say the S&P, just to pick an example. Oh, this is what I wanted to do. On the intraday, you can see that this stock is basically, this is a 10-minute going back for 2 weeks or whatever. And you can just see that it's been declining, kind of got up to the area where it might start to break out, and sure enough, it got stalled there. Now, there's no guarantee it'll keep rolling over or whatever. I would say the only thing that was interesting on this chart was that the PPO started to break out to the upside. Now it could roll over right here, and this whole thing would continue to fall down. And who wouldn't expect that? This was kind of at a horizontal support and resistance level. And if it starts to fail right there, you probably just want out again. But the idea being, as this market chops around here, there should be some opportunities starting to set up for us to look. And again, I'm of the opinion that we're starting a long-term bear market. So now what we're looking for is rallies, and they're usually quick, 10 to 15%, really quick. And then they get you in just long enough to get you happy and then kick you out. So through this period, we're going to have to be more judicious about trying to sell. our positions when they start to make a profit and just take what we can get. And if the market starts to roll over, it isn't the time to kind of be stubborn and say, well, it's been working, so it was one bad day or whatever. It's like when you get your sell signals, you need to kind of hit the hammer and just let them go. So on this weekly chart for the S&P, we can see a slightly higher high in price here and a lot lower momentum here. And I know that we're still holding around the 40-week moving average, but the big problem at this point is we're starting to break below, and everything else is breaking below. So as you're starting to look for new setups, one of the issues you have is when you see these new setups starting to show up, you need to kind of check around and make sure that there's other places in the group. So what I want to show you on these gold trades was how a few of them just started to roll over. And so here's Wesdome Gold. And on the weekly chart, this has not broken yet, but here what you've got is a failed breakout right at prior resistance. So this is kind of telling us to be careful. And look at the PPO. It's basically been pulling back, consolidating, briefly tried to get up, and now it looks like it's trying to roll over. If we zoom into even a 60-minute chart, what you see here is it has been climbing and now it's pulled back. It doesn't look too bad, but on the daily, there's one piece of information that shows up here. And look at this much lower high on the momentum as price goes on to make a higher high. So there's no guarantee that this price will actually stop here or fail here. The only thing we know is it's definitely setting up like a failed breakout. And again, seeing dust move the way it did and the number of stocks in this group that all of a sudden started to break down. So here's one that's Trilogy Metals. And you can see same thing, lower momentum way over here. And it looks like it wants to roll over. And we can go down to Kirkland Lake. And this one, what happened was it went below zero, and then it really had a fast-moving rise up and kind of just exhausted itself right at the back of the uptrend here. So there was a big uptrend in place, went below it, came back up, got right up to prior highs, and it looks rejected at this point. So there's all kinds of setups that I'm looking for, but when they all start to fail on the same day or within a few days of each other, it just makes it more difficult to continue to own the stock. And here you can see the momentum is just barely moving above to the upside. Let me just see. Here's another one, Pan American Silver. So this one was trying to get out of this base and then all of a sudden just gave it up. And look at what's happening. The PPO is rolling over, or the MACD right at zero. This is a very cautionary place. When you rally from below and then stall back at zero, it's a concern. The problem with bear markets is they don't give us these nice long bull market runs. We're probably going to get a lot more take what you can get, and when you get it, just kind of move along. Here's Yamana Gold, and again, same sort of thing, right? Just trying to get up, and look what's happening, rolling over right at zero, and there's lots of these. They were all setting up today, and so if you're watching the group, all of a sudden you see the same sorts of chart triggers showing up on every one of these charts. And I think when you see that broad collection, that's a bigger deal. And let's just say I'm wrong and this goes back down and just makes a higher low here and starts to break up to the upside. That's a possibility. But the bigger issue is you've got this big downtrend in long-term moving average, and you're betting that all of a sudden you're going to be right. And so we called some of the stocks down here to run up. They've been running for almost 2 months, but now all of a sudden we've got the opposite where they're starting to break down. This is the biggest breakdown candle since over in this area. And, kind of these big break ones have been more initiation thrusts than the final one. So I think just in general, the gold stocks look iffy now. There's also a group of stocks called the PIC, and they're in the ETF for metals and miners. You can see it tried to bounce a little bit today. But if we look at a weekly chart, and I put this out on a blog earlier, but if we put this out, we're breaking to new 52-week lows on this chart. The momentum is clearly below zero. We just rolled over under zero, which is not usually a good thing to do. So over here, here was a rollover under zero. Here was another one. And, you know, usually it's quite a bit of acceleration from there. So if they were going to start to break out to the upside, this should have happened right here. And now we've done exactly the opposite. So it was an important place on the chart. And now I think it's even more important that we follow through on the selling of it. So here's steel, and I haven't covered this one off specifically, but you look at this downtrend, same thing. It's going below zero, and now it's rolling over, just as we're breaking horizontal support, going back, in this case, 10 months, not quite a year. But we're seeing it set up broadly, and the CRB index is starting to give us that same sort of signal where it's pulled back under zero and is just starting to turn up. Now I'll zoom in here on the final year just to show you what's going on. But this is a very bearish setup where you go below zero, come up, and then can't get back above zero, and you just start to fail. And here we are, we were riding above the 10-week moving average, which is bullish, but we briefly went above the 40-week, and then we kind of consolidated, and now all of a sudden we've lost that support of the last month. So there's a lot of signals here that are saying just be very, very careful on the whole commodity space. And if we looked across to the US dollar, it's starting to move to the other direction. It's starting to break out to new highs here. So I think it's really important that, you know, as the market moves, your trades may or may not work. I'm very suspect on the whole oil sector. It looks weak now. I think we all know the marijuana sector sold off very hard here, like almost 50% on the news of the after legalization. All of a sudden, everything just kind of let go. So what I wanted to talk about today was some things, how to look for things that are potential buy setups as the market pulls back. And so one of the things I've done here is set up, you know, you could either do it country as Canada or country as US. And if you just wanted the US, then you would just, put in country as US and then put these two hash marks in front, and it'll ignore the country as Canada. And as all this looks for is a close greater than $2, 400,000 shares a day. And the close is higher than it was 2 weeks ago by at least 10%. So something that's moving up while the overall market has been moving down. And so we run this scan. And by the way, I put this in the in my blog here a few days ago. It's the oil blog called Oil Looks Weak. But anywhere in here, the simple scan code is there, and then you can trim it out with other things like the close and which country and that kind of thing. But if we just replace an existing chart list with this, so I'm going to go down and go to scanning and just put it in here. Now that puts all the stocks in here, but they're still not in any sort of order. So what you can do is once you get it on the scooter ranking or whatever you'd like to do, volume, and then just go to the bottom and hit number in sorted order on the summary page. That will hold the stocks that way. So now when we go look at them, it'll be the strongest price action first. So let's click on this stock, and perhaps maybe we just want to view 10 per page just so we can quickly look through them. But this one looks like it's a buyout or a merger or something, so it's not going to help us much. Not really interested in the VIX. So here's NII Holdings, and this stock has almost been unaware that the market's been under so much compression, and it's been moving up quite nicely. So in this case, you probably just want to draw a line around here at 650 or something, and if it starts to take off, you probably want in with a stop close underneath because you're in volatile times. This chart looks too choppy for me to trade. Now here's Procter & Gamble trying to break out to all-time highs. That just looks good. Obviously, it would have been nice to own at $12 ago. But if it consolidates up here, that would be worth knowing. And it's also a very defensive stock, so that helps. Here's another one with a buyout, so you can just hit the delete button. Here's Spirit Airlines. This chart looks beautiful, right? It's consolidating, and now it looks like it wants to start to break out. The scooter is just moving up. And I mean, it did all this while the price action on the overall market was really weak. So if you can, if it holds $50 or something, I think that's probably a reasonable stock to be looking at getting on board with. Here's Philip Morris starting to break out. Cadence Science Systems or Design Systems. This one looks like it's trying to break through to new all-time highs. Sitting right at resistance, that's just textbook stuff that, when this starts to break out, you want to be looking for it. Okay, Oriental Financial Group, this one's just trying to break out to new highs. Axum Therapeutics, this one has a nice base built here. Looks like it's trying to push higher. So I'd say anything back above $4. So it's had a little bit of a pullback if it starts to move, something like that. And again, you got to put stops under all of these because we're in really rough times. If the overall market tanks, these could get pulled back down. Here's Sleep Number, big day today, so let it consolidate a little bit, but it does look like it's trying to make a series of higher highs and higher lows here, and the SCTR ranking has just surged to a new high. Tesla been very volatile, obviously. It's really hard to own because it's been chopping for a year and a half, and so they made money today, which is great and all that kind of stuff. But the foreign competitors are also starting to come in. So this stock's got a lot of work to do one way or the other, and not discussing any of the other stuff, just looking at the chart here. This thing is really, really quick and whippy. And so in this case, basically, as soon as this stock gets up, you kind of want to sell it and then just wait for it to pull back again and do it again. And here's Knowles Corporation. This chart, I don't know, for some reason I don't like it very much, but the scooter's starting to break out above 75, and it's got a nice downtrend on the PPO that's breaking. There's volume that showed up on the stock today, almost 2 or 3 times average. So there's lots going on here. Perhaps it's a nice entry, and just put your stop with the 200-day moving average or something simple. I think we all heard Twitter had a nice day. It's still under the 200-day moving average. So that's not great. But again, you're just trying to find some stocks that you can trade. And in these volatile times, you're trying to pick them up, unless you want to go short, of course. Picking these up on the long side, you might want to do the same search for stocks that are breaking down faster than the market. So stocks like this one just kind of in 2 days has shot up, and it's an expensive stock, Lithium Motors, so trading up around $90, and something really surged it up, from 72 to 90. I don't have the story on it, but I think I'd let it consolidate before I entered. Tupperware Brands, this could probably be considered a defensive, just something that gets sold well when people are tight for money or whatever. So this downtrend appears to be breaking. Let it consolidate a little bit and then try to nibble on it and see if it can work for you. But I'm hoping to just kind of show some ideas, because I know it's hard when the overall market is pulling back to get very bullish and try to find it. But I think if you find some setups that are setups you like, it's easier. Now here's Dean Foods, big downtrend here. This is just hard to own, but you can see the scooter ranking is starting to improve for the second time here recently. So maybe something's going to start showing up in that stock. GoGo, I wonder, is that the GoGo Wi-Fi? Could be, but anyway, it's obviously clearly uptrending and did not pull back at all with the market weakness. So maybe this has a chance to continue to go higher, and it's just breaking through the $6 layer. So that's nice. Omeros Corporation, same idea. Okay, and so that's one example, and in my blog article, I had a second scan that you could do, and it was just to look for stocks that are making new 15-week highs or something like that. So it'd be a little different in character to the other one, but same idea. You're just going to put that into a scan engine and let it run. And then what you end up with, obviously, is a list of different stocks. So what I'm trying to say is try not to wait for, the TV to hand you some stocks to work with. Try and create your own scan. And so in this case, we're just going to pick new scan and paste this in here. Okay. And so I probably don't need the type is stock again or the volume. So I'll just get rid of this. And with that, check syntax, make sure everything's okay, and run my scan. And now, whatever, we can sort it by scooter ranking or whatever we'd like to sort it on, and then replace an existing chart list, put it in here, and whatever, we're going to pick George this time, preserve the sort order, and it's going to put the numbers in front then. But the idea behind doing this is you can very quickly just get a list of charts to work with. Now, from here, we can click on columns and probably add whatever industry or sector or something. And we could sort by scooter ranking is fine, and then sort by sector within that. And so just go down. So here's consumer discretionary, and just looking at some of these charts, are the ones you want to own. That chart looks great. Like, why wouldn't you buy that? Sort of a breakout, and see how it's giving us different names and different results. It all depends what you're trying to find. But I think the opportunity to just, while the market is pulled back here, try and find some stocks that are setting up for potential moves to the upside. Here's Stantec trying to break out of a base 6 months long or something like that. Anyway, the idea is not to kind of create a list of stocks through the show today on the final bar, but the idea is to just show you different ways that you can go hunt in the market to try and find stuff that's moving. And you might get stopped out of a few of them, but you might have some other ones that absolutely take off to the upside. And this Merck has been on quite a climb since April, and it's up 50%. That's pretty big on a stock like Merck. So as we go down here, the gold stocks, again, I showed you why I was selling them today. So I'd probably avoid those for now and let them set up a bit of a base. But I didn't put any price limit on this, so that's why I'm getting some of these 30 centers. But, here's Omega Healthcare. I don't know anything about the company, but I sure like that chart shape, and it says it's in the real estate division. But, that's a beautiful chart, just breaking out to new highs today. And then, anyway, there's different scans for the type of buyer you want to be. So the one scan I had showed stocks that are up over 10% from 2 weeks ago, and they give you a whole different chart look than these stocks that we've asked them to be at new 6-month highs or 3-month highs. So anyway, I'm hoping that'll help you find some ideas out in the market. I do want to talk about a few more things that are sitting out there, but the big issue on these on the markets, one of the things I saw today on my Twitter feed was everybody was saying, it should be a layup today to buy the NASDAQ because Amazon and Google are reporting earnings tonight. And then the interesting part, of course, was they reported earnings, and both of the stocks were down about 3 or 4% in the after hour. So it is so hard when, what you think would be a layup wasn't a layup, and the market keeps working you. So try and use these candle glances to help you find other things that you're interested in. Today, the NASDAQ was up 3%. That's pretty nice. If we go look at the NASDAQ top up, here's the most actives. And NVIDIA is down almost, well, it was up 50% on the year. So it was down roughly 33 or 34% here. And it's trying to rally off the lows. That's a reasonable place to go looking for a stock, even for a bounce. And if you get 10 or 15%, that would be pretty nice. Siri, that chart just looks broken, so it's not really something you probably want to entertain. But looking through the different charts, I think Intel had good earnings. I'm not mistaken. And, here's Microsoft setting up with a bit of a downtrend. So these percent ups and percent downs can really help you just look through the markets and see if there's stuff that you're missing. And it doesn't take very long um, to try and find the charts you want to find. So I don't know why that one isn't popping up. Anyway, and you can also just candle glance them, right? So that go look at them all at the same time and just see any particular chart shapes you like. So Xilinx here is trying to move it back through $80. That looks pretty nice to me. This one, ATN breaking out. This stock, really big downside, very tight trading range, and all of a sudden a big wide candle. So something might be up there. Same thing on this one. So using the tools on the website, I think, is the best thing to go forward here. You're going to have some people who say, don't buy the market until whatever. And I think more importantly is try to find some quick scans or some chart shapes you like that are already on their way. And I mean, if they've been able to power higher, well, the S&P has pulled back 10%. That's pretty fantastic. And in most cases, you're going to be happy to find those stocks. Okay, looking across the other groups here. So here's the S&P 500, and you can also look, through different things like the scooter rankings. Just see what was the top up today, and go look at those charts. So these are the ones where their rankings changed very quickly on the SCTR up here at the top, and Twitter jumped out of a nice base. Tesla's trying to do the same thing. Here's Ford Motor Company. They were on air this morning. Their CFO was on. So you're starting to see some move on that stock. Not sure it's the right answer, but just pointing out that a lot of these stocks that have nice moves, by using these features on the website, you can help yourself a lot. And don't let the news talk you in or out of a stock. Let the price action take you there. So to highlight where we are in the market, maybe I just take a couple more minutes here. And the one setup that I did like that I saw was if you look at the S&P 500 on a daily chart and just go down here. So here was didn't quite go back far enough. I'm just going to grab one more year here. What you see in this move down in February was we had a double dip. So we had a pull down, a bounce up, and then a pull down, and then we tried to rally up, and we got about 50, 60%, 61.8 or something on the fib. So here we've kind of had the double down. And now the question is, can we get any bounce? And again, back up through the 200-day moving average. In this case, it's already turned down. So that would be interesting to see how far, or actually that's the 50 period. So getting back up to the 50 and just seeing what happens when we get up there would make more sense. But I am not a believer in the fact that things are going to just go all the way to the top again. So that would be one of the things I'd be worried about the most. Is just, if you're going to trade this market, make sure you're trading it actively, stops underneath, and whatever you're picking to buy, you're making sure that you're protected to the downside. Yeah, the volatile moves will really help if you're on the right side of them. So tight stops and give them a chance to bounce would be a great place to work. So with that, there's the commodity space to me looks really, really dangerous. I think there's a lot more downside there, and I'll cover more on that on the commodity countdown on the weekend. But try and look in on that. I did do a recording on Tuesday for the Canadian marketplace, and you'll also see some ideas there. So with that, thanks for joining us on today's show. The final bar airs live on Thursdays at 5 p.m. It can also be found on the StockCharts TV schedule at other times during the week. In addition, you can look for it on the StockCharts YouTube channel. And with that, have a great weekend and good trading.